I will be explaining accounting module here next. I will be using Aroma Origins, a coffee brewery and roastery as a company example to showcase its day-to-day daily financial operations like buying bags, selling our products, and link to its financial records and reports. I will set up our company finances step by step, starting from first chart of account. Chart of accounts is our financial method. When we started our company, initiated our company and we have announced, it initialized a standard chart of accounts reflecting as per the accounting framework of inventory. So let's go to chart of accounts. This is chart of accounts, expanded everything. Chart of accounts can be majorly divided into five simple groups. First is assets. Assets is everything. Let me collapse this. No. First is assets. Assets is everything we own, like our raw material, like in case of our company, green coffees, sacks, oil, and machines, and money sitting on our accounts. Liabilities is basically the amount we owe to others, like our bill payments regarding suppliers, loans. Third is equity. Equity is the percentage of money invested in the business by the owner or some other person who have invested in businesses. Then we have income. Income is the money we earn by selling our product, coffee bags, and everything. And fifth is expenses. The amount spent on making these products and expenditure of creating this coffee bags, machines, roasting the coffee beans. Now, I have when expanding the chart of accounts, we see there is some circle-like icon and some folder-like icon. The folder-like icons are basically group accounts. The group account is basically categorizes or summarizes total of everything. They do not hold any account or transaction directly. The circle shaped are the child accounts, wherein our daily ledgers or our daily transactions of payments and everything are posted directly into this child accounts. Let's create a let's create an account under this chart of accounts to showcase how this happens. Let's create some indirect expense. There can be some transportation expense. Hence, it will be a group account. Account type, it will, as we have directly undergone indirect expense, it will automatically select, or we can select it here also, indirect expense. We can automatically select currency. Suppose if we are like using an account to showcase our foreign imports and imports, if we are paying them in US dollars, we can set our currency as per our account. So we have checked this account number, selected it. Account number basically links this account to a bank account. If we add the bank account in the accounts, we can move it. We can move it. Now, under this, we go to transportation expenses. We create a child account. It will be fuel cost. It's a child account, so we'll uncheck group and it will automatically input everything and we will create a child account. Now, for a company runs multiple stores in different locations, such like, for example, of our company, we own locations like online website for our selling our store, some offline stores, and we have a main office where we have some things we do. So if we keep track of account of each of these websites, online, offline, it will make our chart of account look very nice. If we have all of these accounts, it will be very difficult. So we use chart of cost centers or cost centers to keep track of this. We can create simple branches for it. So like this, I have already created. Like we add on select cost center number is simply an identifier for it to recognize it. This helps us keeping our chart of screen, and we can easily keep if we want to keep track of a particular thing. We can go to reports in financial reports, suppose in this balance sheet. I can search for it online or offline section of my store to see data survey. Suppose we have added some additional things to our to keep our chart of accounts clean or to check our particular thing. Suppose we have different shops in India around like Pune, Mumbai, Delhi. We can create accounting dimensions. Accounting dimensions. We select our doctor. Here I am selecting large doctor. I'm adding Delhi branch. One Mumbai branch. I can make this material. Making this mandatory helps because when we search for there will be always an option for this. Just create another dimensions. Efficient. Now there is a branch option. So if we select our Delhi branch, we can check everything. And profit loss it is also. This is all about accounting dimension and cost center. We do not start our company from scratch. We generally migrate some old legacy financial data and from when changing from one system to another. Here in your next, we will also do this. Old financial data generally includes some unpaid bills or payments or some amount of money which we have in cash. So we do this with the help of opening invoice creation tool and generate. Let's start. Let me showcase the generator. One, the generator. I've already added some details. This is an opening. Opening entry is basically used in this migration of financial data, which creates it here. I've added the amount of 10 lakh in my cash. I've also added a temporary account. If we don't add the temporary account, it will not accept the info. Hence, I have added the temporary account. It doesn't accept entry due to the reason that in this thumb rule in accounting, the total sum of debit must be always equal to total sum of credit. This is mainly done in the form of equation of assets equal to liabilities plus now branch. Now, upon submitting this, there will be some changes in our financial ledger. Let me show you that. Financial reflects balance sheet. Here we see there is 10 lakh in current and assets and temporary. When we balance our all accounts and show where the money is from, this will be all sorted out and we will be finally zero. Well balance also. And 10 in assets is debited, 10 lakh in assets is credited from temporary accounts, and assets as accounts. This is how we do it with the help of general entry. Now let us see how we do it with opening relation. Opening relation invoice tool is helpful in case of unpaid bills or unpaid payments to be made. We go to opening relation invoice tool. We add our details. We can select our customer. Invoice target sales. Somebody has to pay me back some money. We add our amount and details. Sorry, I've added the. As we made mandatory accounting dimension, that is shown. So let's launch one. Invoice has been created. We will see also see this in our financial reports. See here, 10 lakh 50,000. 50,000 account receivables. As it was an unpaid payment, unpaid amount of money we have to receive. It is showing in account receivable debitors. And then temporarily there is when we balance our all our bills and payments, this will be all solved. Move into our respective places in Samsung. Okay. Let's see how we deal with some additional cost associated with our products when we are, for example, in this case, when we are ordering our beans or coffee beans, there are some shipping charges or maintenance charges associated with the coffee beans. So we use landed cost voucher to address those charges. We go to landed cost vouchers. I've already eaten. Let's see another one. Here we select our bill which we have to make. So here is the purchase receipt. I select purchase receipt and get item set automatically for the relevant details. Now we add our charges and details associated, right? Marketing charge. Okay. So when we save it, this automatic as I've already created Windows, saved it. I've submitted this already. So let's see its changes in the financial reports. 2004 in general value to 2,400 rupees has been added. Certain forwarding charges has been added in stock and out. It counts into the valuation of item as the arrangement means you have made for getting an item. This completes our cycle. Let's move on to the selling cycle. Let's see how our buying cycle impacts our accounting. As it uses perpetual inventory accounting. When we buy, will show its movement directly to its physical movement will directly be connected to our financial ledger. Let us see how it happens. First, we will create a purchase order for our item. I've already created purchase order. On this, we create delivery, purchase invoice. Then we create a purchase receipt when an item was created. I have created the purchase receipt. So when the purchase receipt is created, after submission of it, there are some changes due to it in our financial ledgers. Let me show it. Here in this general ledger, there's movement of 4,000 rupees. So as we have got our item, we have increased our stock in our asset is debited by 4,000, and it is credited by the stock received but not billed. This is a temporary account. When we make our final payment, there will be some changes on it and it will close. Let's see what happens if we make our payment. If we create purchase investment, let's go to the purchase order. Here we will create our purchase invoice. See, select. Now I have created the purchase invoice. Let's see what is happening in the financial budget. Here we will see that 4,000 rupees have been added to the creditors and it has been debited from the stock received of now. It will also show changes in the balance sheet also. Balance sheet, it will show your 4,000 is shown in the creditor section. 4,000 is okay. Yeah. This is an example of accrual accounting because here there is no payment or exchange of cash history. All this has been on the basis of our bills and receipts. When a deal is made, it is shown in the account. Hence, every transaction is shown. When payment will be made against that payment purchase orders, that will show in a financial level. Let's make payment to it. Before that, let's see what will happen when we sell our products to customers. How at stage of selling cycle does it impact our financial ledger and how it is linked to our movement of our stock. So let's first create a sales order. I create a sales order. I select some customers from my list. So I will sell them 10 kg of item at cost 500. Then the delivery date is something. Then let this be add. Let's see it. I have added all my necessary details for sales order. Let's save it. Submit it. Now, when we create a delivery note, delivery note is generally created when the good has moved on from our warehouse. So and will go to the warehouse. So we will create a delivery. Now that delivery note has been created, let's see what happens in our ledgers. Balance sheet. Let's see element. General ledger shows there is some movement of 2,400. 2,400 stock has been delivered. 2,400 is our cost of goods and sold. And as we haven't received the like sales and was. So it shows the amount of that has moved from our asset that is stock in hand and went on to go to the income side on the PL statement. It shows 4,400. Now see the statement, it will show negative 4,000, 4,000 indirect expense, total expenses. Now 4,000. Now let's see what happens when we make sales invoice against that delivery. So that's why I have to create sales invoice. Now all all the details it has out on the page. Let's save it and submit it. Now we have received created a sales invoice of 5,000 rupees. Now let's see the financial reports. General ledger is showing sales of 5,000. We will be a bit in 5,000 in debtors. Now let's see in PL statement. It's showing profit of 1,000 rupees. Now, this is the total selling cycle and its impact on our different return everything. Now let's see how we set up budgets, TV restrictions, and relatively restriction among our different cost centers or launches available. So, like, as well, company will expand different locations and different departments will also get this spend. So we cannot allow them without limits because we can make a very possible like crash. So we do this in reactiveness with the help of budgets. Under budgets, we can select our cost center and add restrictions on the sales category. Let's see how we do that. Let's get the budget and budgets. Now here I've selected there is option of also branch. You can select the branch and some implementation and how much it should spend. Cost center. Let's go with the example of the branch in the group, for which financial year are we setting the implementation to which financial year, which shows that now whether yes, what is the frequency of the implementation? Is it like 20,000 per month, 20 lakhs per year, or something like that? I said it 20 monthly and a month of 20. From which and how is this applied on the I select on the cost of goods essentially. So this is the budgetary restriction applied. Now we see what happens if they cross or what the system tells. This is basically the control action. So if I click on it like purchase order, looking action expenses. So basically it will warn them if it exceeds annually. It will stop them if it exceeds annually. It will warn them if it exceeds monthly. Generally, in case of purchase orders or initial stages of purchasing or selling items, we want them. But in cases of like purchase receipt, purchase invoice, purchase receipt, or delivery note, we have still action of stopping. So if they exceed the budget of 20,000 by the invoice, if they buy an item of 30,000 or something more of total expenditure, the ERP system will automatically stop them. Hence, this covers all about regarding our budget. Now there is furthermore thing. There is something like budget variance. So I have let's submit my budget. This the link. Now I have set 20,000. It has monthly divided into 1,006 1,600. So let's see what happens in the budget variance. Something known as budget variance. Let me select the here it shows how much we have spent already, how much is the total budgeted allotted for its year. It is showing for the year 20K is the budget allotted, 7 years spent it already. After expenses will be shown. uh, This is this is budget variance sector, which tells us about how our budget is for a particular branch or department of the company. Now we will see the taxation section here next. As we are operating in the Indian market, we follow GST rules. Like complying with GST rules and taxes helps in managing our financial operations quite well and paying tax on time and filing on returns at the end of the time. So, with the help of India Compliance app, which is integrated with the documents, it makes tax easier as we use the HMS related to what item. Let me show what is that. So when we create an item, there is a code associated with it. There is a code associated with it. So directly gathers all the necessary tax details from them. So we can all we add. the tax details as per our requirements in this country. So, I'm taking random number, 12% out of the options in tax category. Basically, there are majorly considered two categories. One is in-state and out-state tax. In-state and out-state tax are differentiated on the basis whether the transaction is taking place within the same region. If I am transporting my goods from, or I'm getting my goods from a Maharashtra local supplier and selling it to Mumbai, it's an in-state tax. But when I am getting my goods from directly from another state, suppose I'm getting my goods or coffee beans from Maharashtra and selling it in Delhi, then the outstate tax will be, or it is an intrastate transaction. So I add in-state and outstate both. Same and same. Now we go to CL7. We will try to see how these taxes add up in our financial revenue. I create our select my customer item. And now here I will be selecting my task category. Will state here automatically 9%. As the 18% taxes level on this, it has automatically taken it and divided line between the central and the state level. All evaluation is done. Now let's see it. Now let's see what happens when we make our payment of our sales order. When we get paid on our sales order and how the taxes flows in our financial reports. Now, as I have submitted my sales invoice, the sales invoice has been submitted. Let's see the changes in our financial level. Here is the tax shown. Tax is shown different numbers. Let's see in general level. Here also tax is shown, which is credited to the tax accounts of the venue and debited from our total transaction. So this is how we comply with taxation. When payment and everything is done, there's also option of creating an e-way bill or e-invoice, which is helpful in submission of taxation when we are filing our returns in USD and at the end of the financial year. After we have done all budget restriction, buying, selling our coffee, setting up our cost center branches, paying our bills, receipts, and everything. We now will see how we can evaluate our financial health of our business. In ERP financial reporting is the place where we see all our financial statements. Now, let's start from PL statement, which is profit and loss. So, profit and loss helps in summarizing everything about our payment to the system. Uh, it basically tells us what we have earned, what we have gained in this financial year. We have made this payment. It tells us basically differentiates income and expense. Expenses mainly shown in like see cost of goods sold and everything indirect expenses. Indirect income we see sales and any other indirect incomes such gains we have seen. Indirect gains we have seen. So it shows a profit of 2,600. Has haven't shown much of the transaction, but it's quite small. So it, how much we have gained into the limits like 1,000, spend it, earn that is 7,000. This is our profit. We can also apply filters like for a particular quarter or a date range. We can see as per that, or we can apply a particular branch, then uh, it shows how much we have gained and everything. We can also go into deep dive, take a deep dive into this transaction to check how audit feels, or suppose a higher position person, a CEO or some director or CFO wants to know how much the company has spent and everything. We can select to our like goods and check. If we select cost of goods sold, it shows what transaction have occurred in this, what we have gained. It shows here it's showing the amount of goods that have been added and amount of goods have been sold. One is sold at 4,400, another has been sold at 3,300 rupees, something like that. So we can always take a deep dive and check our this. Further, we can also check invoices through this also, like the reference. Now this, when I will click on this invoice number, it will directly take me to the sales invoice. So all the details related to it, date and everything is there. So we can jump from our financial reports to check the details of it, detailed of it transaction, show out how it has occurred and everything else. Now let's check another financial report, balance sheet. Balance sheet basically tells us what we own and what we own in this financial year. It keeps it pretty accurate. It here has it shows in our current assets what we have made, and it also shows liability what we owe, what we have to pay, our loans and some taxes and everything related to this. This keeps our balance. This keeps our total balance. Generally, assets is always equal to equity. Total assets is 17,000. Total equity, the total asset or debit is sold. Here the total credit is sold 7,000. The profit is added on the liquidated portfolio. So this shows our financial health. When a financial year of a company has ended, we close that financial year. We do that in Megatonix with the help of period closing vouchers. So we go to period closing voucher. We add the official year. This is the official year. It shows again closing account head. Any profit gained from this is moved to an account head. Basically, it goes to like reserves and surplus. So if we have gained of 2,000 rupees, when we close this financial year, it will move this 2,000 rupees into the next financial year. Into the next financial year. Let's close this. So, remarks is basically essential if you have to add any important deals or something like that, or any reminders for our next financial year, or any pending payments which will take from this financial year to next financial year. Now we create our virtual address. Okay, so some stock we have created open, we have well done it, so it's showing complete. But yeah, this period closing voucher is how we close this financial accounts everything and move on to the next financial year. This sums up our total journey of financial side of the documents of our company, Aroma.